Thanks very much for staying with us. You're still tuned into Business Day right here on ET Now. Let's get in an expert voice then. Aaron Smith, Managing Director at Superfund Financials, now joins in on the show from Hong Kong. Aaron, thanks very much for being with us this morning on Business Day. Let's just talk about the momentum in manufacturing, which has seemed to pick up further in the month of November after months of climbing in India as well as China. Now, do you see pressure in more rate hikes ahead, and what are its investment implications in these markets?
Well, I think that the investment implications is a flight to quality. What we've seen is that investors have been piling into emerging. Well, I think that the investment implications is a flight to quality. What we've seen is that investors have been piling into emerging market bonds as an alternative to bonds from the West, from Europe and from the United States. This is a short-term trade. What we will see in the future is more flight into hard assets. So already we've seen consumption in China increase 500% for gold. So now China is starting to rival India in terms of gold consumption. We expect this trend to continue as investors look at hard assets as a proxy for fiat paper money.
Aaron, oil prices, those are steadily inching upwards over the past couple of years. In fact, now plus that $80 per barrel mark. A lot of analysts talking about it breaking that $100 per barrel mark. Now, if that does happen, can we expect slowing growth in the emerging markets in Asia?
Yes, I think all things being equal, if the economy stays steady or is even stagnant, we would expect that oil could break the triple-digit level simply because of the growth of the money supply. So it's not that oil will be getting more expensive. It's just that the supply of dollars, the supply of euros, the supply of paper fiat currencies is increasing. So from that perspective, we expect oil to increase in nominal value. If there isn't any economic growth, then it's virtually a sure bet that we'll see oil trading above $100 per barrel in 2011.
If we talk a bit about the base metals, then you do have copper, which has in fact touched its record high, gaining 1.8% on the LME. How do you forecast most of the base metals going forward?
Yes, we've seen a jump in base metals. As you point out, copper has risen strongly. From a technical standpoint, we would say it's in a medium to strong upward trend, and this will continue irrespective of the economic situation, as I pointed out, because of the fiscal stimulus, the growth in the money supply, and factors that have nothing to do with the actual physical demand for copper. But there is, I think, a lot of upside potential in base metals like copper, nickel, any of the different markets. But especially copper right now, we see to be a position in a technical uptrend where we would have long trading positions.
And with respect to the rising commodity prices, would you get into raw material companies?
Well, I would shy away from that because the companies themselves are going to be sensitive to overall market sentiment, number one, and number two, those companies have a large amount of debt. I haven't seen any commodity-oriented companies in the world that don't have a debt-to-equity ratio greater than 1. That means they owe more bonds than they have in equity outstanding. So basically, when interest rates start to go up, as will occur while commodity prices go up, it's going to be tougher and tougher for these companies to refinance their debt. The third factor that you have to consider is that commodity companies don't always perform in tandem with commodity prices. That may be because they could hedge their portfolio or hedge their exposure. A fourth factor to consider is that commodity production is getting exponentially more expensive. So as oil prices rise, for example, it gets more expensive to mine gold. There are many other cases that you could look at, but basically the costs of production are going up.
Thanks so much, Aaron, for being with us this morning on Business Day. Pleasure to have you on the show. So that's Aaron Smith, in fact, saying that he expects crude oil to cross that $100 per barrel mark, that the commodity production is getting expensive, and that the corruption in India may just lead to market corrections going forward. Let's move across then to our research desk, and we've got Megha Memorial.